You will never become successful if you don't have a clear trading plan, and trading plan is a set of rules that will help you achieve systematic results in the most effective way and minimize impact of emotions that lead to mistakes. Therefore, in this video, I will tell you my plan for 2024. The trading plan includes three main aspects. First of all, these are entry rules. These rules determine at what point we can enter into a deal. In other words, this is your strategy. Second aspect of the trading plan is position sizing, how much money you can risk on each trade, and of course the third aspect is your risk management. So let's talk about my strategy. This year, I'm planning to focus entirely on price action. And if you use indicators, then you can use them only as a confirmation tool for entering a trade. There is already a series of price action strategy reviews on my channel, so now I will talk about them more specifically. And after watching this video, you can actually explore each topic in more detail on my channel. In binary options, not many traders use price action, as this strategy is more complicated than just simply analyzing indicators. But at the same time, this is the most profitable type of trading. When trading on price action, the trader's task is to analyze the price movement and having identified key levels in the recent past. And as the price approaches these levels, you need to use additional confirmation techniques to enter the transaction. As for the levels, there are three main types. First one is support and resistance, second is trend line, and the third one is moving average. However, in my plan for 2024, I will not use moving average, as this technique seems to me to be more complicated. When trading on key levels, the most important thing is to learn how to correctly label them on the chart in order to work only with the reliable levels. And in this videos in my price action series, I told you about how to apply support and resistance levels, and of course I told you about trend line levels and how to work with them correctly. When the price approaches the level, it has two options for action. It can either bounce off the level and continue its movement, and this is called continuation pattern, or it can go through the level and change the direction, and this is called the breakout pattern. In my plan, I decided to focus only on the continuation pattern, as I think it's easier to predict than the breakout pattern. And therefore, my main task is to find the points where a price rebound is most likely. To do this, I use additional techniques. First of all, I use candlestick patterns because candlesticks can tell you a lot about strength of a trend at a given moment, and they are especially effective in finding price reversal points, which is exactly what we need when trading on a continuation pattern. And there is already two videos on my channel in which I analyzed various patterns, as well as in my course there is a cheat list with the basic patterns that I use myself. And by the way, if you want to study with me, then you can find the link under this video. The link is going to be to my Telegram. You can simply text me there and join my academy, where you will receive a course which is still free, and you will get support from me and supervisors who will help you along the way. In addition to candlestick patterns, I will also continue to use indicators to confirm entry points into a trade. And the main indicators are the alligator, stochastic, RSI, and MACD. But I will only use them as a confirmation to enter a deal. Depending on which indicator will show me the best win rate, I will change them over the course of the year. So my strategy is basically I'm waiting for the price to approach the key levels, and only if I see the confirmation from candlestick patterns and indicators, then I enter into a deal. And of course, I will change the indicators depending on which one will give me the best result. Speaking of analyzing the results, I decided that this is a great time to take a really serious approach to this question, which, to be honest, I kind of gave up on at some point, but this is keeping a trading journal. And I also advise you to pay really close attention to this important point. Trading journal, this is your personal diary for transactions, in which you will recall all the details starting from when and what price you entered entered and exited the transaction, the size of the transaction, your profit or loss, as well as the reasons for all of those decisions. It is a really powerful tool for tracking your progress, identifying your strengths and weaknesses, and this helps you to improve your trading a lot. Trader's Diary helps you manage your emotions and look at your psychology as well. You can analyze which emotions influenced your decisions, such as fear, excitement, hope, disappointment, and many others. You need to learn to control them in order to avoid impulse or irrational actions. And of course, regular analysis of your trading allows you to understand your trading more deeply. You can find and correct mistakes, set up strategies to increase your win rate, and in addition to all of that, you can easily compare trades to one another, which helps you to determine which pairs and at what time work the best with your strategy. The next part of my plan is, of course, the sizing of my positions and overall risk management strategy. And I will leave the plan unchanged here. I will continue to use only 2% of my balance for each transaction. No matter how you look at it, 2% is really the best sizing. And I, of course, allow the use of martingale, where you are increasing the amount of the transaction by 2 times after failure, which allows you to cover the loss. However, you need to be extremely careful with this because I allow a maximum of 3 losses in a row, after which I will end the session and will not continue to increase the amount of money to fix the loss. And as for the basic rules of risk management, I will continue to use the basic principles. I immediately end the session after 4 losses in a row or 10% drop off my balance, as well as when I reach 20% profit. At the same time, I open maximum of 8 deals per session, and this rule helps me to control my emotions so I won't get overexcited and I avoid ravage trading. So the main goal that I set for myself as a trader is, of course, to improve the quality of my transactions. I'm ready to sacrifice quantity and devote more time to analysis, as for a couple of years already being a trader, I know that this is much more important for the long run and it's much more profitable. And in fact, this is the exact reason why I need a trading plan. And of course, I strongly recommend that you will make one too, and the more detailed it is, the more effective your work will become. I will continue to share my results on YouTube and at the Academy so that you can use my experience to improve your own results. And don't forget that if you want to trade using price action and not indicators, you can start learning from this video in which I told you how I determine all the levels and find all the optimal levels in which you can enter the transactions. But that's it for today. Thank you so much for watching. Don't forget to subscribe to this channel. Don't forget to like this video, and I will see you in the next one. Bye bye.